Hey traders, Andy Demmer here. So happy Friday. Hope you guys are having a nice day. At least it's sunny in London, as you can see from my background. So all is good and we've got the weekend to come. So I hope you've had a great week or in general and obviously in your trading. I wanted to shoot you this video before the end of the week just to kind of remind you of a key lesson that I think is very, very important when it comes to trading correctly. Now, sometimes it's really, really easy to forget that the market has a general direction. And, you know, we kind of focus on the small details. So we're doing all this analysis on our 15-minute chart, hourly chart, 4-hour chart, and they're great. Okay, so they're great for pinpointing little turning points. But if we don't know the general direction of the market, if we don't know where we're going, you're missing a big part. So I want to just show you my screen just now. I brought up here a picture of the euro dollar. Now, why am I bringing this up? Because I just want to show you an example of what I'm talking about here. If you have a look at the euro dollar, you might not be able to see it up here, but it's actually a monthly chart. Okay, a monthly chart. And maybe for the day traders, you might be thinking, wow, a monthly chart. Why would I want to look at a monthly chart? I'm going to recommend that every single month, at the start of the month, you have a look at the monthly chart. Why? Because we want to know exactly how the monthly has closed and whether there's been some significant change in direction. Okay, so have a look at this. If you kind of see, look what the market has been doing. The market has essentially been finding these high points, and see how basically the euro dollar has been going down and down and down for years. This is since 2007. And look where we are right now. We are at that point exactly right now. So it's really, really important to understand that. Now, if I just get rid of those drawings, I'm just going to zoom in here and show you what happened. So look what's happened. Now, bear in mind, this is since 2007. So we're looking at a 14-year line of resistance. That's not easily broken. And often, if you see something like that broken on one bar, you need to be very cautious, because often institutions set these traps. And so the retail traders, okay, the people that have learned from YouTube and from books, they think, wow, it's a break, let me get in. And then they trap you, and then the market goes the other way. So have a look at this. If you have a look here, can you see how the market is basically essentially closed there above those lines? Okay, I mean, that I don't count as a close because it hasn't at least got 50% of this bar above this line. But this is a close. But here's the thing that would have made me a little bit wary of this close is the fact that, one, it's an average size bar. It's not a big bar. Imagine a 15-year trend down, and then you've got a tiny little closed bar above it. That can't be too convincing. We didn't even take out these highs. And then look what's happened since. We've now got a bearish engulfing bar. And we are back below this line. Now, some of you might argue, well, okay, what if this might just be a little range? And yeah, in the short term, it looks like a range. However, right now, I have to question whether, we're now going to start to push back down, right? That is bearish right now. And maybe we'll at least go back and test this line here. Now, for me to change my stance on the euro dollar, I would need to see a close above here with an above average size bar. So what could happen is this month could be a kind of holding bar, maintains that little bit of the range, and then we get a big bar up like that, maybe something like that, and we close above here, and that could potentially be the start of a new trend upwards. Right now, the market is showing signs of possible reversal or sideways. Now, one thing to remember, guys, is that we are coming into the summer months. Now, typically the summer months are range bound. Okay, most people go on holiday and the market doesn't tend to move a lot in the summer. So we might just see the markets ranging. However, I will say this, these circumstances right now are slightly different. Why? Because right now the market is, we've been in COVID, we've been in lockdown, and a lot of people are not going away. So therefore, the market might be slightly different, and it may not be exactly as it normally would be in the summer. So just have that in your mind. But typically, the market will range, and then come September, everybody's back on their desk trading, then we'll pick a direction. So we may have another month of kind of sideways, just trade what you see, use the lower time frames to pinpoint those little turning points, and just take advantage of the market that we're currently seeing. Right now, I am neutral to bearish right now on the euro dollar based on that monthly chart. But like I said, it wouldn't surprise me if we had a little bit of a range again this month until the end of the month. And then we'll see if August does kind of create that big move, or more likely another little ranging bar in August, and then maybe a big push up or big push down in September, as normally would happen in normal market conditions. I hope that helps, guys. Have a great day. Have a great weekend as well, and I'll catch you again soon with another video. Take care, guys.